Well, investors are still closely watching the Apple event, how Apple incorporates AI into its newest devices at tomorrow's big event. Craig Moffett is partner and senior managing director at MoffettNathanson. He's got a neutral rating on Apple, upgrading it from a sell rating last Thursday, so incrementally, I guess, less bearish on the name. Craig, it's always great to speak with you.
Good to see you, Melissa.
I feel like we're counting down. We had a countdown clock on CNBC earlier, 20 hours to this event. But I almost feel like this is the most inconsequential Apple iPhone launch in a long time because it doesn't have it's so ordinary. It's so pedestrian in terms of new hardware upgrades, new camera, better battery, thinner, of course, like it's going to have a new phone. It's got to be thinner. It's got to have a better battery. It's got to have a better camera.
Yeah, absolutely right. And in fact, the fact that you were able to just recite that litany of what we're going to see tomorrow tells you that we already know what we're going to see tomorrow. So it's almost impossible for this to be a meaningful event for the stock tomorrow. We know what we're going to see. We're going to see a thinner iPhone. That'll be probably more expensive. It's also not clear that people are going to want the thinner iPhone because coming with a thinner iPhone is less battery life. And I'm not sure people are going to be all that eager to make that trade-off. So at the end of the day, as you said, it's just not a terribly consequential day for Apple.
At the same time, Craig, what is factored into the valuation, which is granted, I guess you can look at it as expensive for a 10% revenue grower. The PE is more expensive than a Meta or an Alphabet or a lot of.
It's not close to a 10% revenue grower.
Okay, so not even worse. But you make my point there, Craig. I mean, what is factored in here? Is it enough that there is a normal upgrade cycle, that people like me with an iPhone 11 will upgrade the phone because I have to? It's got a cracked screen. Or do we have to have that super cycle? Is that what is priced in?
That's what's priced in, Melissa, and that's exactly the problem. Look, I love Apple as much as everybody loves Apple. I'm a devout Apple user. The products are great. I sometimes hear this straw man argument when I'm posed as being hyper bearish. And by the way, I'm not particularly bearish. I just think the stock is somewhat overvalued. But I keep hearing people say, you're crazy. No one's going to switch from Apple to Android. And of course, they're not going to switch from Apple to Android. That's not the point. The point is, unless you get faster revenue and earnings growth, the stock at 31 or 33 times earnings right now is too expensive. And ultimately, it's going to underperform over the long term because other things will grow faster. Even the rest of the S&P 500 is going to grow faster. So what was priced in, and especially, by the way, the PEG ratio at Apple compared to the rest of the Mag 7 is moonshot. Right. So what was priced in a year ago when everybody got all jazzed about the Worldwide Developer Conference was a super cycle. And that depended on people taking the promised AI Apple Intelligence and needing better hardware in order to run it. That requires that it runs on the phone. What we're getting closer to finding out is that Apple's going to do really well in AI, probably, but more likely, if it's by partnership, it's not going to run on the phone as likely as it is running in the cloud. And while that's great for consumers, it probably doesn't drive a super cycle. So you're left with a great company with a great consumer franchise. But as you said, with people upgrading on a normal pace of upgrades rather than a super cycle, that's probably not good enough for what's priced into the stock.
So, Craig, we just talked about the hyperscalers and the amount of capital that they are spending right now and what is expected over the next 5 years or so. There's some estimates that, like, in 2029 alone, there's going to be $1 trillion to spend. And, you think about that right now, 25% of sales for those major companies, they are spending on the build-out right now. Apple, I think it's low single digits. So as an analyst, and you look at that, and based on what you just said about their inability to probably have this sort of technology on their phones, has this been a massive, massive misstep on their front? And is it the sort of thing that will keep them in the penalty box for a long time?
Well, you can see it both ways. I mean, right? One of the things that was appealing about Apple for a while was they weren't spending the same kind of capex, and therefore you have a good free cash flow story. I do think that, and Tim Cook has essentially said so, that we're going to have more capex, and they're going to have to invest more aggressively in going forward on AI, and so. Will it start to look like Meta and the kinds of ChatGPT types of numbers? Of course not. But it is likely to be substantially more spending than what we've seen in the past. I don't know. Is that enough to really make it an AI growth story? I'm not sure. It's certainly not going to be in that league. But the people who have said Apple's really well positioned for consumers to get their AI on Apple devices are absolutely right. I mean, it is. Again, it's just a question of what's priced into the stock.